Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the Euro US dollar FX for Tuesday, September 24th, 2013. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. Previous day's trading we had a large black body candle suggesting that in terms of net momentum it had swung back to the sellers, and the sellers were quite strong in this market. The market closed down towards the low, so they were building some solid momentum for an assault on the support levels. 134.95, the area that the market was rejected from in a slight manner for the previous day's trading, has been an important level of support, and today we've closed in a bearish manner down below that level, and this suggests that there is a good possibility of this market continuing to trade to lower levels. For today's candle we have a black body, so we have the sellers making an amount of net bearish progress. A worrying factor here is that the size of that body is less than half of the size of the previous day's body. So even though the momentum in net terms is to the sellers, we have had a slowing of that momentum, and that does raise some doubt about continuation of the trend. But look at where the close has closed within the range. We've closed down almost at the low, and that suggests that the sellers have taken control, and they've taken fairly strong control of this market at the close of trading, suggesting that there is a good possibility of the market continuing this trend. We also see this large shadow on the top of the body of this candle, and that represents price rejection from the upside. It represents the buyers losing commitment as we were trading up around the 135 level, and suggests with this close down below the 134.85 level that the market really does have a good possibility of testing at least a 134.52, and then perhaps even down to the 134 area. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and here today we've seen the market test to the 161.8% level and failed to close below there, so that could be significant. We have had that small amount of rejection, but really looking at the short-term dynamics in this candle, it is a black body closing down towards the low, strong price rejection with the shadow on the top, and suggesting that the market may trade to lower levels. If the market does continue the trend to the downside, and there isn't any guarantee that that will happen, but the likelihood is that that will happen, we do have the 261.8% level coming into play if the market does trade lower, and that's coinciding with the area around the Tenkan-sen, which is trading at 134.07, so there should be very strong support down around that area. In terms of the Fibonacci retracement, and here we've seen the market test to and just through the 38.2% level, it does suggest with this bearishness down below the 38.2% level, there is a good possibility of the market testing to the 50% level, which is at 134.46. Now, in terms of Ichimoku, quite a strongly bullish market in all three timeframes. We had the market trading up above the cloud and well up above the cloud, and the market was looking a little bit overextended. It was trading a long way away from the cloud when we were trading up around this 135.49 area, and it didn't surprise to see the market come off. So still a bullish market in that long-term time frame. A bullish market also in the medium-term time frame by trading above the Kijun-sen, the pink line, and that Kijun-sen is pointing flat, and price action is being attracted back towards there, and this suggests that there is still a good possibility of the market trading back to lower levels, trying to find equilibrium around that Kijun-sen. In terms of the Tenkan-sen, the green line, we are still trading up above the Tenkan-sen and still trading a fair way up above the Tenkan-sen, giving us a bullish market in the fast-term time frame. The fast-term time frame, but still looking a little bit overextended, trading a long way away from that Tenkan-sen, and it's unusual for the market to get a long way away from there, and it's little wonder that when we're trading around this area that the market is now attempting to retrace back. The Chikou span here trading up above the corresponding price action. It's confirming the bullishness that we're seeing in all three time frames, but the candle itself in terms of the short-term dynamics are really not favouring the buyers. We have a downtrend in place in the first time frame. We have black body candle, the sellers in control and committed, the buyers losing commitment, and this does suggest that even though we have bullishness in these higher time frames, the market is overextended. It is looking to find equilibrium. We have a good possibility of testing down to 134.52. Let's watch how the market reacts there, but if we do trade in a bearish manner down through there, the market could test down to around the 134 level, and we're likely to see buyers come back into this market either around the 134.52 level or certainly down around the 134 area.